Welcome back to Facebook. I'm Jill Malandrino with the Voice of America, and this is NASDAQ's Facebook Live. It's typical for new investors to hit speed bumps and make some common mistakes along the way when they first start trading. Mike, let's talk about that. What are the most common mistakes that newer investors make when they start out trading?
Well, as a newer investor, I started out about 10 years ago, and I made just about every mistake that you could possibly make. Some of the big ones include going all in on a stock that you hear about on television or you read about in the news, not having any kind of a stop loss in place, a place where you'll get out if you're wrong, and there's all kinds of mistakes similar to that.
Right. Well, it's a good thing you figure it out early, because a lot of people, they'll blow themselves up when they first start trading because they're not diversified or they're blowing through stops, as you had suggested. Even trading news, especially in today's electronic world, it's really tough to compete with the algorithms and the news bots. So I mean, even 10 years ago, you had a little bit of an advantage, but certainly not today. How long did it take you to kind of overcome making these mistakes, and what finally contributed to your success?
It took me probably about 4 years or so before I finally got the knack of what I was doing. And what finally contributed to my success were three primary things. Mm-hmm. The first was only focusing on a select group of stocks. I like to focus on only high-quality growth stocks, the stocks that have strong earnings and sales, the stocks that are capable of making 100, 200, 500% or more of a run in a given year. Then number two is focusing like a hawk on risk management. So whenever I enter any kind of a trade, I always know exactly where I want to get out before I get in. And finally, the third thing was to try to figure out a way to do this part-time. I'm a family man. I have a wife. I have a daughter, a 2-year-old. And trying to make sense out of the stock market is very difficult in that kind of a situation. So I needed to try to figure out a way to how to be successful and how to create a routine that would be super efficient, that would allow me to still have time on the weekends and not have to dedicate my entire day to sitting in front of a computer. Right,
well, especially with the 24/7 news cycle.
Exactly.
It could be pretty exhausting, but let's talk about chartyourtrade.com. There's a tool on there. I checked out over the weekend. It was pretty cool, called the Chart Your Trade MRI. Tell us more about that, because you are going to be competing in Benzinga's Global FinTech Awards, so they see something innovative there as well. How does that work?
So the Chart Your Trade MRI stock scanner, it scans for the best of the best growth stocks in the market. There's roughly 10,000 or so stocks actively traded, and to find the best growth stocks, the top 1%, it's like finding a needle in a haystack.
Right.
So we created the Chart Your Trade MRI as a giant magnet to try to extract those stocks and pull them out. I used to spend a lot of time on the weekends doing that, about 5 hours or so, and what we created was an app that's able to do that with a single click. So you click a button, it runs all these different scans comprised of 65 different criteria, and here's your list of growth stocks. It's pointing you towards the hottest industry groups. It's also pointing you towards gauges of market health, so that way you know, okay, is the market getting stronger, is the market getting weaker?
So it's based all on an algorithm, not necessarily fundamental analysis. What's the data set like?
So it's hunting for stocks with high earnings, high sales, of at least 25-30% or more. Some of the scans are focused on. Other scans are looking for stocks with high relative strength, stocks that are
so it does incorporate fundamentals and technicals within the scan. What's the success rate with MRI?
So it's based on the individual trader. So it'll pull about 50 or so stocks every single week. Some of the stocks that...
what are some stocks that are in MRI right now, for example?
One that I've been actively trading is a stock called Applied Optoelectronics. The ticker symbol is AAOI for anyone that's watching. And that's a stock that first passed our scans in about October. And in December, it started to rally. In January, it popped. And since it came onto the scanner, it's run over 150%. So if you're an astute trader, you could have latched onto that stock and rode the trend all the way up. Most recently, it started to consolidate. It's forming what's called a high type flag. That's a very rare pattern, but when it appears, the upside could be 100% or more. So when we trade a stock that's super hot like this in an industry group that's also very hot, we want to focus on risk management. So we'll look for a spot to get in at an advanced entry point, and we'll place a stop loss below a support level, a place where the stock has traveled to before, has found demand and rallied up from.
Right. Well, I mean, every trader's risk parameters are different as well. I mean, it's up to the individual in terms of how they want to trade it. So, you know, like my risk tolerance might be, okay, 30% on the upside, I'm out, 20%, you know, my max loss. On Chart Your Trade, do you have any tools that can help with risk management? And how would people get in touch with you? Is there a community aspect on the site as well?
There is. So we have a position size calculator that's free. Anybody can use that. The way that I like to position size is to only risk 1% of my existing capital on any given trade. So if I lose, I'm losing very small, whereas the upside could be dramatic.
Right. Well, you hope so anyway, right?
Absolutely.
So is there like a community aspect on the site? Are traders able to speak with you? How would they get in touch with you?
They can get in touch with me on chartyourtrade.com. We are all over the social media, on Facebook. Facebook.com/chartyourtrade. We're on Twitter at Michael G. Lamothe, on StockTwits, also at Michael G. Lamothe.
Yeah.
And we offer...
Well, it's pretty cool. It's like a virtual trading desk with social media, right?
It really is.
Yeah.
It really is. There's a wealth of ideas out there, and we're trying to focus on the best ones.
All right, and to wrap it up, it's the first day of trading for the second quarter of 2017. What's your outlook on the markets?
Well, we've rallied strongly off since Trump took office. We've been running very hard. We've been running for about 12%, a little bit greater than that. And we've been consolidating where the S&P 500 is pulling into the 50-day moving average, and it's actually setting up in a bullish pattern that we're ready to take advantage of on the next upswing.
All right. Well, okay, so we are going into earnings season as well. That run that we've had, I mean, some stocks have run 15 to 20%. Earnings has to be justified at some point. You're going to need to see that growth reflected in earnings. Are you concerned about that at all, or this technical pattern's pretty strong that you're seeing right now?
The technical patterns are pretty strong that we're seeing. So it's as simple as we see the chart pattern, and we'll place a stop loss below a support level. And if it triggers that, then we're out. No questions asked. If it continues to rally, then we can progressively raise our stops up, so that way, as the stock rallies, we're locking in gains as it moves. All
right. Well, I like that. A combination of fundamentals and technicals, you really can't go wrong if you're using both disciplines.
Absolutely.
All right. Well, thank you very much for joining us today, and thank you, Facebook, for joining me. I'm Jill Malandrino, market reporter for the Voice of America, and this is NASDAQ's Facebook Live.